All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today's July 23rd, 2026. And our top story this morning, we've been warning about this one all week. Last night, they finally did it. Houthi and the Blowfish are at it again. The Houthi rebels in Yemen hit 2 Saudi oil tankers with missiles and drones overnight, and markets are already reacting. WTI crude is above $90 a barrel, now higher by some $23, $24 since the conflict re-escalated. Brent crude is at $99, approaching $100 a barrel. We've even got the 10-year yield is spiking. We're now above 4.7%. After struggling for several weeks to break above 4.6%, we blew right through the 4.6s, now into 4.7. And look, what comes next? I mean, the U.S. Navy struggled to stop Houthi attacks the last time they did this in 2024 and 2025, not for lack of effort, not because the Navy isn't capable enough, but because in the age of drone warfare, it's virtually impossible to stop someone from shooting at you if they want to. The things are just too damn cheap and too plentiful. And although there have been great strides in interceptors and countermeasures, the advantage is still very much in favor of the attackers. And so, what happens now? We struggled to contain this the last time when we weren't fighting the Iranians at the same time. And what did the Saudis do? So far, the Saudis have done a whole bunch of nothing in this conflict. They've taken their licks and they haven't shot back. So are the Saudis going to sit by while their boats are attacked? And, remember, one of the things that has cushioned the blow from the closure of the Strait of Hormuz was this east-west pipeline in Saudi Arabia, where the oil that used to go through the Strait of Hormuz out the Persian Gulf is now being pumped to the west to the port of Yanbu, where it's loaded in the Red Sea and goes through the Bab Al Mandeb Strait. It can't anymore, not with the Houthis acting up. The only alternative is to go through the Suez Canal to the north, all the way through the Mediterranean, around Africa, and then to Asia. Of course, the VLCCs can't fit through the Suez Canal, so you'd have to use smaller ships to do that. What a logistical nightmare that would be. Total mess here, guys. And look, as far as the next rungs on the escalation ladder, what's left? You've got water, which they're already starting to hit water plants, and you've got Karg Island. So things continue to get worse here. We'll see where we go from here. Now, you've also got shipping concerns in the Black Sea. We've got a story about how ship owners are not sailing to Ukrainian ports now because of Russian missile attacks in retaliation for the Ukrainian attacks against many dozens of Russian tankers there. So drones are making a mess on the high seas this morning. We've also got big tech earnings. Google posted yesterday a massive earnings beat, a massive revenue beat, and nobody cared, because Google is increasing their Capex yet again. More money to burn. Now, my question is, the increase in Capex, is this because they're building more projects, or are they having to increase their Capex by tens of billions of dollars just to maintain the projects they've already announced, because the cost of everything that goes into them is ballooning higher? I think it's the latter. But either way, the market did not like that Google is burning even more money in the fires of artificial intelligence. Google's free cash flow has officially gone negative now. And the icing on the cake this morning, the European Union is fining Google $1 billion just because. That's pretty much how Europe eats, is by fining American tech companies $1 billion on a periodic basis. Meanwhile, Tesla also reported yesterday. It's very similar here. They're increasing their Capex. Market did not like that increase in Capex. Tesla wants you to look at my robots, at my robotaxis. Whatever you do, just ignore the fact that Tesla's car business has screwed the pooch once again. Car business is not looking good at Tesla. Their free cash flow has also gone negative. You guys noticing a pattern here? Oh my God, explosive growth, big beats. The future is now. Check out my flashy new science project. Everybody ignore the fact that over here, there's less money in the bank than there was a few months ago. It's happening more and more often now. Sooner or later, the market is really going to care about this. I think it's sooner. We're starting to see it. The market is punishing Capex increases now. I don't know. Will the rest of big tech get the memo? Probably not. Probably not anytime soon. Now, Elon Musk also made some interesting comments on the earnings call yesterday when he was asked about the possibility of a Tesla SpaceX merger. We'll have to talk about that one. And in the least surprising story of the day yesterday, White House Science and Technology Policy Director Michael Kratsios says that Moonshot was able to create their Kimi K3 AI model that is causing havoc in the AI world using illegal NVIDIA Blackwell chips and by distilling Anthropic's models. And where's all my AI bros? Once again, telling me that I have no proof that NVIDIA is illegally selling their chips to the Chinese. Where are you guys at? For years, you've been telling me this, even though the mountain of evidence has been sitting on your face. We all know Supermicro is doing this. We all know NVIDIA is either looking the other way while they do it or outright helping them. But hey, Michael Kratsios, White House policy guru guy, why don't you throw these a-holes in jail? Just a crazy idea. Prosecute them. I don't know. I just throw them out there. You guys do what you want. Or just, keep making it legal for a fee. I mean, it's not like they're going to use these things to train drones to target our ships and kill our sailors and Marines. Sure, just keep doing nothing about it. We've also got Anthropic will assist AMD in buying $5 billion of chips from themselves. That story broke yesterday. Another circular finance deal in the AI bubble. Why stop now? Am I right? OpenAI has increased their spending plans through 2030. It is now $750 billion. And that sound you hear is probably Sarah Fryer having her fifth stroke year to date. Imagine being the CFO who's trying to take this company public when Sam Altman keeps saying shit like this. $750, $750 billion. OpenAI says they're going to spend. Just question. Does OpenAI have $750 billion or anywhere near it, or a business model that can produce that kind of money? No, they do not. But you know what? Just keep spouting out big numbers, right? That's pretty much what this bubble now exists off of, is just perpetually saying bigger and bigger numbers while ignoring the fact that you can never possibly deliver on your promises. We've been doing this for 3.5 years now. It's a heck of a time to stop. I mean, the time to stop was not starting this stupid bubble to begin with, this biggest accounting fraud in history. But hey, yeah, $750 billion in spending plans, sure. Mark Cuban says data centers are going to end up as pickleball courts. And I'm just over here like, no, man, Spirit Halloween. But I get the point. They're going to be freaking useless, but they just keep building them. And last but not least, we've got Hyundai is out. Their profit was down 21% year over year. The car business continues to struggle, not just Tesla, traditional cars as well. Combination of Chinese competition, tariffs, and struggling consumers taking a chunk out of Hyundai this morning. Guys, we got a lot to talk about. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. But first, if you will, please hit that like button, and you new guys hit that subscribe button so you can come back tomorrow and have your coffee with the melon heads, because we do this every business day. The S&P 500 right now is lower by 71 points, or almost 1% in the red. Much of that coming in the last few hours since news of the Houthis hitting those ships. We've got the Dow is off 564 points, 1.1% in the red this morning. And the NASDAQ is leading the way lower, off by 391 points, 1.35% in the red. The NASDAQ was already down because of the big tech earnings and the Capex increases, and then the Houthis just made that even worse. Checking in on South Korea, another up day for South Korea yesterday. It was higher by 4.4%, 299 points. That is 3 days of gains in a row for the Kospi index here. The volatility seems to be subsiding ever so slightly. We've now had 3 days in a row without a 5% move in the index. And hey, that's actually saying something. I know normally you'd be like, what do you want, a cookie for that? I get it. But, the Kospi index has been volatile as all get out. Also threatening to break out of this downward channel here that we've been in for the last month or so. I don't know what that means, and we'll see what happens when the South Koreans have a chance to digest these higher oil prices when their market opens today. Looking over at the Dixie, the dollar is stronger this morning, as you would expect, with the big move in oil, 101.40 for the DXY, higher by 28 basis points. That is going to put pressure on asset prices this morning, as is higher interest rates. The bond market is reacting here. A combination, I think, probably mostly the Houthis and what's going on with oil. But let's also keep in mind the big increases in Capex at big tech. Big tech is now leaning heavily into the bond markets, hoovering up liquidity there. So it's possible here big tech spending plans may even be affecting the scales a little bit. 30-year yield, 5.187%, higher by 4 basis points. The 10-year yield is at 4.711. That's higher by almost 5.5 points. The 2-year yield is at 4.351, higher by almost 5 points. And the 1 month is at 3.731. That's higher by 2 points in change. And I wanted to take a look at the long-term chart of the 10-year. These are daily candles here, guys. And you see these red lines. This is a pennant pattern. When I zoom out, you'll be able to see that a little bit better. But we broke out and then failed the retest. That was back in May before the memorandum of understanding was signed. We again retested or tested that line. This was mid-June. We failed to break above that. Then we broke above it at the beginning of July. We came back and retested, and now we are moving higher. This looks like a breakout from this pennant pattern. Now, why is this so important? Because let's zoom out a little bit and move back. The 10-year yield has been consolidating since the fall of 2023, when famously when Bill Ackman covered his short bet on U.S. Treasuries. That was the peak, and we've been kind of bouncing around in this narrowing range. Now we've got a textbook breakout, and it looks like rates could be resuming that higher march that we went through in 2021 and 2022. And you may recall that was a brutal time for tech stocks. And I also want to just set this to weekly candles, and let's zoom out. Guys, this is the onset of a 40-year period of consistently higher interest rates following the end of the prior 40-year period of consistently lower interest rates. And even that period followed the 40 years of consistently higher interest rates coming out of World War II. This is actually 40 years here. The time scale compresses when you go back that far. The point is here, guys, almost everybody alive in finance today has trained, and their entire financial history, knowledge, experience is bound by the assumption of rates moving lower over time. And that may not be a safe assumption anymore. So that breakout is actually very important. It looks like over the next few years, these rates are going to be moving consistently higher. Nobody's prepared for that. We've got Bitcoin is lower this morning by $1,000, $65,054 for Bitcoin. It had a good couple of weeks here, but the Houthis and the oil prices, along with big tech earnings, are now taking some of the wind out of Bitcoin sales. And looking over at commodities, we got a lot of red in the metals. Spot gold is lower by $85, $4,045 for spot gold. That's lower by 2.05%. Spot silver is off by $2.50, 4.25% lower, $57.21 for spot silver. I still like the shiny, but higher rates, stronger dollar, not good for the metals here. Copper is lower by 1.5%. Platinum lower by 2.9%. Palladium 3.9% lower. And oil is ripping here higher by 5%, 91.15 for September WTI futures. That's up by $4.32. Let's take a look at the oil chart here, guys, and you can see it is accelerating now. And I just mentioned yesterday that it looked like the Houthis were not yet priced in, that the market was just kind of humming along on this trend that it had been on for a couple of days, hadn't really reacted to the warnings of the Houthis. And, of course, this morning the Houthis are shooting, and oil is moving sharply higher here. Let's talk about what happened. The Houthis claim strikes on Saudi Arabian oil tankers as Rubio says Iran is not ready to make a deal. The Tehran-backed Houthis have claimed attacks on 2 Saudi Arabian oil tankers in the Red Sea, threatening to open up a new front in the Middle East conflict as the U.S. completed its 12th consecutive night of strikes in Iran. Forget the soft language here. They are not threatening to open up a new front. They just opened a new front. This is past tense. They're not threatening anything, guys. It's done. Yemen's Houthis said Wednesday that they have targeted 2 Saudi Arabian oil tankers named Encelia and Layla with drones and missiles for allegedly violating their maritime blockade. The attack, if confirmed, would mark the first since the militant group announced a naval blockade against Saudi Arabia. It has since been confirmed by the UK MTO. The state-run Saudi press agency confirmed the Incelia was targeted while transiting the Red Sea, resulting in a fire at the bow of the vessel, citing an unnamed official from the Transport General Authority. The agency reported all crew were safe and described the attack as a violation of international law. Separately, the United Kingdom's Maritime Trade Operations, or UKMTO, reported Wednesday that an unknown projectile struck a Saudi oil tanker about 130 kilometers from the coastal town of Al Shukaik in Saudi Arabia. UKMTO said the incident resulted in a fire on board, but reported no casualties. All right, so the Houthis are shooting ships again. And it's also interesting who they're not shooting at. We've got this one from Javier Blas this morning. Now, yesterday he put out that at least one of the oil tankers that had made a U-turn 2 days ago in the Red Sea had performed a second U-turn heading back toward the Bab Al Mandeb Strait controlled by the Houthis. That vessel was carrying Saudi oil and signaling China crew and owner. All right, so we had reported yesterday that even the Chinese ships had done a U-turn and fled the strait. Well, some of those Chinese ships turned around again and went back towards it. And then Javier Blas is saying this morning that the Chinese-flagged oil tanker has now emerged from the Bab Al Mandeb Strait with a load of 2 million barrels of Saudi oil. Another Chinese tanker is about to emerge too. It has since emerged. For now, emphasis on for now, the Houthis are enforcing their blockade differently depending on the flag. In other words, the Houthis are shooting at ships carrying Saudi oil as long as they're not Chinese. They're letting the Chinese ships go through. For now, he's very quick to emphasize here. So I don't know if that means the Saudis can still move their oil as long as it's on a Chinese ship or not. But for now, that's what they're hitting. Also, ship owners halt vessel calls for farm exports at Ukraine's Black Sea ports, the minister says. So it's not just what's going on in the Middle East here, guys. It's also in the Black Sea and the Sea of Azov. Shipping is a mess here. We had reported earlier this week that the Ukrainians had lost about a third of their export capacity for exporting grains because of Russian missile attacks on ports, namely Odessa. Now the ship owners are not willing to sail to those ports, probably because of insurance costs. This is going to drive up wheat prices, guys. Grains are getting more expensive because of this disruption. And also keep in mind, we have got this strong El Nino. They're calling it a super El Nino. Where's Chris Farley when you need him? El Nino changes weather patterns, and it changes rainfall patterns, and it is known to cause crop problems. We could be looking at significantly higher food prices on the horizon. I know that's more great news for you guys after years of food inflation, thanks Federal Reserve. But between the Russians, the Ukrainians, the Saudis, the Houthis, and El Nino, looks like it's going to get more expensive to eat. All right, now on to big tech earnings. Alphabet's $205 billion spending target fuels AI cost fears. What's a few hundred billion among friends, though? Alphabet raised its capital spending forecast to as much as $205 billion this year, reigniting concerns about a lack of fiscal discipline in the race to dominate artificial intelligence. Fiscal discipline? Never heard of her. The Google parent company boosted its projected capital expenditures for the year to a range of $195 billion to $205 billion, up from a previous forecast of $190 billion. Guys, memory prices alone could be responsible for that increase. I don't think they're building any more data centers here. This is just to keep up with the price increases on their existing projects. They have to raise Capex. Shares fell about 3.6% in pre-market trading Thursday. It was a reminder that the full cost of Silicon Valley's AI rivalry is still largely unknown. Alphabet was the first of the big tech companies to report quarterly results. Meta, Microsoft, and Amazon follow next week. Altogether, the four companies telegraphed in April they'd be spending as much as $725 billion this year on their AI ambitions. If Alphabet is any indication, the sum will be larger by the end of next week. That's even while the returns on those investments remain unclear. And they're not unclear, guys. The returns on investments are not at all unclear. They are zero. There is no return on any of these investments. What's unclear is, will it stay at zero or will it rise one day? The AI bros are saying, trust me, bro, it's not going to be zero forever. For the last 3.5 years, I've been saying it's going to be zero, and it's still freaking zero. But hey, don't let me stop you from pumping the stock, even though I'm old-fashioned. I think the point of business is to make money. Call me crazy. I realize this is an antiquated way of thinking, but I'm very set in my ways. Alphabet's bigger spending plan does not sit well, Investing.com senior analyst Thomas Montero said. Add to that an increasing rates environment and a continuous supply-demand crunch in AI infrastructure, and the notion that the company would fund itself with cash flows forever might be starting to fade. There ain't no might about it, guys. Free cash flow just went negative, and Google is already tapping the bond market and issuing stock. Oh, no. They are not funding this with free cash flow, and it ain't even close. In another indication of the immensity of Alphabet's capital spending, the company's quarterly cash flow was negative for the first time since going public more than 2 decades ago. According to data compiled by Bloomberg, negative free cash flow came in at $5.9 billion in the period. Check out the chart. Black line below zero. Yep. Math doesn't lie, guys. You can do what you want. You can mark up your stake in Anthropic and create $60 billion in earnings. You can mark up your stake in SpaceX and create $60 billion in earnings. But you know what you can't do? You can't fake money in the bank. And it's now going down at Google. For the first time in their 20-year history as a publicly traded company, free cash flow is negative. They have destroyed the cash cow that was their search business. And the EU wants $1 billion too. Google slapped with $1 billion fine under landmark EU digital law. Let's not spend too much time on this, guys. This is Europe doing Europe things. Alphabet stock down 5.25%, $324.18, lower by $17.84. Let's see. Year to date, though, Alphabet is still positive, just barely, though. Probably not going to last here. Guys, are you getting the message, Silicon Valley, big tech? The market wants you to cut your spending. So maybe you guys should cut your spending. I don't know. Certainly ain't going to be Tesla that does it, though. Tesla profit slides. Why, you might ask? It's funny you should ask. Because spending climbs to meet Musk's AI goals. Oh, look, I'm seeing a pattern here. Spend more money. Market punishes you. Tesla's profit tumbled despite a strong quarter for its automotive business, pressuring Elon Musk's plan to refocus the electric vehicle maker on AI and robots. By the way, I disagree. I don't think this was a strong quarter for their automotive business. But spending on the ambitious initiative surged to $5.8 billion in the second quarter, resulting in Tesla's first cash burn in 2 years. Oh, look, more negative free cash flow. The company still expects Capex in excess of $25 billion this year, and executives are now predicting even larger outlays going forward. This is a massive Capex year, Musk said late Wednesday on a conference call to discuss quarterly results. We should be spending on Capex as fast as we can. Spend as fast as we can without it being too wasteful. That's a contradictory statement, Elon. Spend as fast as you can is literally like textbook definition of wasteful. You can't be like, we've got this money. Quick, get rid of it. But let's not waste it. Come on, guys. Tesla shares were down 5% in pre-market in New York. The stock had slid 17% this year through Wednesday's close. The planned investments will support a significant expansion of factory operations, including production of Optimus humanoid robots, AI initiatives, the autonomous cybercab, and expansion of its robotaxi fleet. Tesla has de-emphasized its traditional auto business, even as sales have shown signs of recovery from a two-year decline. By traditional metrics, the quarter was a disjointed one for the EV maker. Adjusted earnings fell to 33 cents a share in the period, well short of 51-cent average estimates compiled by Bloomberg. Guys, pause for a minute. This is a $300 plus stock, and their EPS was 33 cents. I mean, come on. I get it. It's Tesla, and nobody cares about valuation, but give me a freaking break here. They also reported negative free cash flow of $1.09 billion. Revenue, meanwhile, was $28.2 billion, beating market estimates. The results came several weeks after Tesla reported selling more than 480,000 vehicles, well above expectations. Big miss on earnings, big beat on revenue. That sounds like margin compression to me. Cars remain Tesla's most important business, while robotaxis and other projects still aren't generating meaningful revenue. Profit was pressured by lower average vehicle selling prices as the company offered incentives to entice buyers. Tesla also phased out the S and X models, two of its highest priced cars. Operating costs surged 47% to $4.35 billion. Whoa. Operating costs up 47%. It must be that 3.5% inflation that caused that one. Either way, guys, Tesla not having such a good day here. But we also got an interesting one here. Musk keeps Tesla SpaceX merger speculation alive and cites growing overlap. I think this is probably where this is going eventually. Tesla on Wednesday left the door open to the EV maker merging with his other trillion-dollar-plus valued firm, SpaceX, declining to dismiss the possibility and citing growing overlap between the companies. As you can tell from my many collaborations on so many fronts with SpaceX, there's more and more overlap, Musk said on Tesla's earnings call. We can't talk about let's say this again. We can't talk about, combining companies and that kind of thing on an earnings call, he added. It's got to be done with the appropriate process. So Elon Musk just said, I can't tell you that SpaceX and Tesla are merging. I would have to tell you by filling out a form. So did he just tell us SpaceX and Tesla are going to merge? I think it's inevitable at this point. Elon has stated this is his goal. But for now, Tesla stock is having a rough morning, down 8%, $344.10, off by almost $30 here. Been a rough year for Tesla, getting rougher. Let's see, year to date, Tesla's now down 16.8%. You can add another 8% to that once the opening bell goes ding. Again, their legacy business, or their primary business, cars, is not doing so well. 33 cents in earnings for a $344 stock. Yikes. Meanwhile, U.S. official says moonshot accessed banned NVIDIA chips. Oh, look, more evidence of that thing I have no evidence of. Wow, isn't that amazing? A White House official accused China's moonshot of improperly using U.S. artificial intelligence models and NVIDIA chips to create the Kimi K3 system that stunned the tech industry last week with its advanced capabilities. The company acquired GB300 equipped servers and has accessed GB300s in Thailand, likely to train its AI models, White House Office of Science and Technology Director Michael Kratsios said in a social media post Wednesday, making the case that Moonshot violated U.S. export controls and company's terms of service to build its product. The semiconductor servers Kratsios referenced are part of the Blackwell generation of NVIDIA's products, which the U.S. forbids from sale to Chinese companies, though the Trump administration has allowed some sales of NVIDIA's H200, the older generation. It continues to prevent sales of the advanced Blackwells. And no, it doesn't, guys. NVIDIA and Supermicro, and I'm sure others, are selling them at alarming rates, tens of billions of dollars a year. They're moving huge numbers of these things. The Chinese are having no trouble getting their hands on this. All they have to do is move it through an intermediary. We all know Supermicro is doing it. We all know Jensen knows they're doing it. They're not taking any steps to stop it because there's no consequences. So, Mr. Kratsios, if you really don't like this, then, I don't know, maybe prosecute these guys. Maybe trade in the black leather jacket for an orange jumpsuit. I just throw them out there. But it's not just the illegally acquired chips. It's also IP theft here. Moonshot developed a sophisticated internal platform to conduct large-scale distillation against U.S. models, Kratsios said, referencing a technique in which AI researchers use the outputs of a so-called teacher model to train a student model and replicate some of its results. In other words, they copied Anthropic. Treasury Secretary Scott Bessent on Tuesday voiced similar distillation concerns, though not specific to Moonshot, about open-source Chinese AI companies engaging in what he called intellectual property theft to create AI models, which is ironic because the AI models themselves are the product of intellectual property theft. How dare you steal my stolen IP? This administration supports open-source models, but what we do not support is IP theft. You can't support large language models and support IP theft at the same time. They're diametrically opposed, Scott. If we see, especially that overseas models are stealing from our great companies, we have the ability to sanction them, Bessent said on Fox Business. He reiterated the stance on Wednesday, writing in a post on X that U.S. sanctions and entity list designations will be on the table. Bessent's comments echoed growing accusations from OpenAI and Anthropic that their Chinese rivals have made systemic and unauthorized use of results from leading U.S. models to develop a rival generation of chatbots at a fraction of the cost. Oh, cry me a freaking river, Sam and Dario. Seriously, you guys stole everything you used to train your bots, and now somebody's stealing from you, and you're crying to Uncle Sam? Well, boo-hoo. Anthropic has previously accused Moonshot specifically of distilling its models. Moonshot has not responded to those allegations. Guys, just a reminder that these frontier labs, Anthropic, OpenAI, they have no moat whatsoever. They're now in a price war. They have no moat. Their IP theft can be stolen at will, and they're already losing money. So, but don't worry, phase 3 profit somehow they're all going to be profitable someday. I don't know how. And we've got AMD to invest up to $5 billion in Anthropic as part of a computing power deal. In other words, Anthropic is going to assist AMD in buying $5 billion of chips from themselves. Stop me if you've heard this one before, guys. I mean, this is exactly what NVIDIA does with CoreWeave. They do it with Nebius. They do it with Iron. They do it with Lambda Labs. They do it with Firmus. Google does it with Anthropic. Amazon does it with Anthropic. SoftBank does it with OpenAI. And AMD does it with Anthropic. I mean, if it wasn't for accounting fraud, this bubble just wouldn't exist. Here's another example. Another $5 billion, a company buying $5 billion of its own freaking product with its own money using a cash furnace of Anthropic as a middleman to do it. I'm sure they're creating some kind of special purpose vehicle to hide additional debt off balance sheet at the same time with private credit. It's going to be great. You guys are going to love it. And OpenAI has come up with an even bigger random number today. OpenAI's planned cloud spending hits $750 billion as computing efforts ramp up. The AI giant, who already loses money, has committed $20 billion to a new data center project in Georgia and hired an architect from Elon Musk's computing build-out. OpenAI is scaling up its data center ambitions and its budget for spending on them. The AI company has raised its projected spending on compute to around $750 billion through 2030. That's over the next 4 years, apparently, up from a projection of roughly $600 billion earlier this year, according to a person with knowledge of its projections. The increase reflects new agreements with cloud computing providers as OpenAI races to lock up the enormous amounts of computing capacity it needs to develop and run its AI models. OpenAI's spending on cloud computing has become a central focus of CEO Sam Altman's leadership team and has been a source of tension between him and his chief financial officer, Sarah Fryer, ahead of the company's planned IPO. And wouldn't it be just hilarious if Sarah Fryer were to leave the company? And they keep pointing this out. Sarah Fryer does not want to take this company public, and Sarah Fryer has the gargantuan task of having to rectify the books at OpenAI, which she has tacitly admitted are a mess, which is why the company hasn't gone public already. I don't know this IPO ever happens. And all I could say is if Sarah Fryer ever leaves OpenAI, man, the fireworks in the market that day, what a red flag that would be. And she can't be happy with this. If she wasn't happy with 600 billion, she ain't going to be happy with 750. This was kind of funny too, this one yesterday. Mark Cuban says many AI data centers could wind up as pickleball courts. I'm not going to recreate the whole interview. It's up there on Twitter if you guys want to see this. But I've been joking around that these things are going to be spirit Halloweens for like a year now. Pickleball's kind of funnier. I wish I'd said pickleball. So well played, Cuban. Well played. Hey, maybe you could mention this to your fellow shark, Mr. Wonderful, who's out there in Utah using like half of the state's freaking electricity supply to build the biggest pickleball court in the history of humanity. Maybe you could tell him about that and just make sure at the end you say, I'm out. And last but not least, Hyundai Motor profit tumbles as sales slump in China and Europe. More bad news in the car business. Hyundai's second quarter profit missed analyst estimates as global sales dropped with U.S. policy uncertainty and intensifying competition from Chinese rivals hurting demand. Operating profit was 2.85 trillion won, or about $1.9 billion, just reminding us all that won are essentially worthless. For the 3 months ended June 30th, that's down nearly 21% from a year earlier. The Seoul-based company said Thursday that fell short of analyst estimates for 3.1 trillion won. Revenue rose about 2%, a record for the second quarter. So that's interesting. Look at what their expenses are doing. Revenue up 2%, but profit down 21%. The results highlight the challenges facing Hyundai and other automakers in an increasingly uncertain business environment. Even as North American sales strengthen, the rollback of U.S. support measures for electric vehicles have clouded the longer-term outlook for the car maker and its affiliate Kia. Hyundai is also losing ground to Chinese EV brands in places like Europe and Asia, while U.S. tariffs are still a major headwind. The car maker said levies cost about 900 billion won in the second quarter, on top of the 860 billion won in the first quarter. Prolonged geopolitical instability, including the Iran conflict, has heightened external uncertainty. CFO Lee Sung-jo said in the earnings call, China's aggressive EV offensive is exerting a major impact on the growth of overall demand. Wholesale deliveries during the second quarter were about 991,000, down 6.9% from a year ago, driven by lackluster demand in the Middle East. Global retail sales fell 4.2% in the quarter, including a 7% decline in Europe and a 33% slump in China. Wow, they had just completely been pushed out of the Chinese market. And sales rose 7.4% in India and about 4% in North America. That is interesting. The North American sales are rising, so maybe a little silver lining to that big gray cloud, but more than overshadowed by that 33% slump in China. So Hyundai not doing so good this morning either. And I just want to say thank you, everybody, for having your coffee with the Melon Heads this morning. Don't forget the like button and the subscribe button for you new guys. Thank you also to my supporters on Patreon, YouTube members, and Buy Me a Coffee for supporting the channel. Links are down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.